I think the more important question is, did it benefit or does it benefit the people that it needs to benefit? And I
Yeah.
think there it went really well because you could find farmers being able to use who were unbanked, being able to do
Mm-hmm.
transactions through their mobile phones. Because and this was very necessary for their circumstances,
Mm-hmm.
as well as people in maybe more urban environments. So it was spread across, I think, the levels of society that needed it the most. So in that case, it was a perfect kind of adaptation of the technology. At the same time, could it be at a higher scale? Could it be kind of more advanced?
Mm-hmm.
Could it have gone faster? Probably. But I think that for the time, it was great that we found companies like M-Pesa really enabling a lot of people to be part of the economy in a way that they wouldn't previously be able to do at scale, even
Mm-hmm.
if it was, and I'm saying just with kind of question marks,
Uh-huh.
just Africa.
Welcome to Women Disrupting Tech. My name is Dirk Jan Upkes, and on this podcast, I give the women who work in tech the platform they need to inspire and empower each other. Join me on a journey into the world of entrepreneurship, funding, biases, and role models to discover the strategies for success in the tech industry. In other words, how women can disrupt tech. Are you ready to listen? Hey, welcome back to Women Disrupting Tech. Thank you for listening to episode 54. As you probably know by now, only 1% of startup funding goes to female founded tech startups. So it's safe to say that in the tech startup ecosystem, there's no such thing as equal access to capital. Therefore, I want to make an episode about financial inclusion. Because financial inclusion is about access to financial services, including capital, for people who traditionally have difficulties accessing them. By the way, financial inclusion focuses on equal access for all underrepresented groups, so not just women. My guest in this episode is Kimberly Ofori. And Kimberly is a former banker who turned management consultant and then turned digital entrepreneur at Ofori and Company. She's also the founder and general partner at Future Ventures Fund, where she and her partners invest smart capital in diverse founding teams that address global financial inclusion, health, and food challenges with technology across Europe and Africa. In this episode of Women Disrupting Tech, we'll discuss the importance of financial inclusion, how financial literacy can help underrepresented groups get access to the financial system, and how male allies can contribute to more financial inclusion, especially when it comes to funding of female founded tech startups. So, when you're ready to listen and learn about the power of financial inclusion for a better planet, please welcome to Women Disrupting Tech, Kimberly Ofori. Hey, good morning, Kimberly. Good to have you on Women Disrupting Tech. Question I always ask at the start of the podcast is how you got into your current job or current position, and start wherever you want.
Thank you, Dirk Jan, and I'm really excited to be here today. So I took up quite an unconventional path to where I am today, but I did start in with a corporate career in the banking and insurance industry,
Mm-hmm.
investment banking in the Netherlands, and then I moved to the Middle East where I got into consultancy, and then I made another leap, but back to Europe into entrepreneurship. I kind of accidentally got into technology with my first startup, building a
Uh,
recruitment software. And after selling that platform, I built a bunch of other platforms that perhaps we'll dive into, perhaps not, that failed
mm,
dramatically before I sold my last startup, which was an entrepreneurship platform, an online collaboration platform for African entrepreneurs, and
mm-hmm.
also a portal for investors to find. gems on the African continent.
Uh-huh.
So in 2019, I started to seriously consult some of these startups to also help them to scale internationally.
Mm-hmm.
Operational scalability was one of the things that I focused on, but really also looking at how we can redefine what we're building with technology and who it impacts.
Yeah.
And that's what I've been doing for the past 6 years, really, as my main focus.
Okay. And why that specific focus on who we impact?
Well, I think that with great opportunity
Mm-hmm.
um, comes a lot of possibility, and I have always found myself to ask why we do what we do,
Yeah.
and I think that comes back, so circles back to why I have a focus on impact, because I think, yeah,
Yeah.
you can do something because you can, or you can do something because it's meaningful, and that's kind of
Yeah.
the direction that really aligned with the way that I think and work and how I would like to contribute to the world.
Okay. So that's the meaningful part.
Absolutely.
Yeah. Uh, and you said you were involved in a couple of African startups. Um, help, please help the audience understand the background of why Africa specifically.
Well, there were a number of reasons. I particularly I was born and raised in Amsterdam in the Netherlands. I'm half
Mm-hmm.
Surinamian, I'm half Ghanaian, which is a country in West Africa.
Uh-huh.
I wasn't particularly aware of kind of the innovation revolution that was happening, especially in fintech at
Uh-huh.
the time. But when I started getting more active in the startup space, I found that there were so many problems that were being solved by Africans for Africans with
Mm-hmm.
technology. And they were able to kind of leapfrog their way into new disruptive tech because they didn't have the previous limitations that perhaps Europe had.
Mm-hmm.
Just looking at mobile, for instance, where most African countries never had to go into landlines, and so mobile technology became a big thing. And
Mm-hmm.
we had mobile money as one of the first continents that was really rolled out across the continent. So I found that really interesting. Aside from
Mm-hmm.
the kind of the personal relation I would have with that, it
Mm-hmm.
was more so, wow, there's so much untapped opportunity here, and that really made me excited.
Yeah. Because what I was wondering about was, do you think it was a benefit that they didn't have the landlines or didn't have, let's say, the legacy technology in place so they could go straight into mobile and straight into internet? Yeah.
Yeah, I think there's always two sides to a coin, right? I
Hmm?
think that in hindsight, yes, for sure, because it
Yeah.
helped. It was something that it allowed most countries to innovate in a way that was relevant for them in their
Yeah.
situation. And so kind of wanting to copy paste what has worked elsewhere is doesn't always work, and I think usually doesn't work. So I think
Uh-huh.
in that case it was really good that they didn't first have to take that middle step of doing that first.
Yeah.
At the same time, there are some benefits to understanding kind of how you build infrastructure successfully, right?
Yeah.
And how you look at interconnectivity and kind of regulating things across different countries and jurisdictions. And this is
Mm-hmm.
something that didn't happen. And so you do find that a lot of the solutions then became siloed. Solutions that were either only for West Africa or either only for South Africa.
Mm-hmm.
That I think has also kind of been stifled the growth in a way because you didn't have that early on collaboration that you had to enforce because you were connected in that way.
Yeah. And that then also led to, uh, did it also lead to less scalability then of the solutions?
So
Or
the
was the
funny,
scale eventually there because there was someone decided to put money behind it?
yeah, so the funny thing about when you speak about the African continent, and I think this applies to Asia as well, is
Yeah.
it's like it's so big, right? So
Uh-huh.
when we talk about scale, what do we really mean? You can talk about the African continent alone, and we're talking about billions of people, not
Uh-huh.
millions. So
Uh,
even if we're
uh,
looking at I think the more important question is, did it benefit or does it benefit the people that it needs to benefit? And I
Yeah.
think there it went really well because you could find farmers being able to use, who were unbanked, being able to do
Mm-hmm.
transactions through their mobile phones, because and this was very necessary for their circumstances,
Mm-hmm.
as well as people in maybe more urban environments. So it was spread across, I think, the levels of society that needed it the most. So in that case, it was a perfect kind of adaptation of the technology. At the same time, could it be at a higher scale? Could it be kind of more advanced?
Mm-hmm.
Could it have gone faster? Probably. But I think that for the time, it was great that we found companies like M-Pesa really enabling a lot of people to be part of the economy in a way that they wouldn't previously be able to do at scale, even
Mm-hmm.
if it was, and I'm saying just with kind of question marks,
Uh,
just Africa.
yeah. No, no, no. What I meant with scaling is that I what I try to allude to is more your remark about that solutions were kind of siloed
Yeah.
from East to Africa, West Africa to South Africa. So
Mhm.
at some point you want to create something that applies to the whole of Africa, but that so that was more the background
Right. And
of,
I
of
think, again, the question becomes if that is something that you should want, right? And I think that if we're looking at the, yes, it's one continent, and then again, and they have a lot of overlapping challenges and opportunities within the
Mhm,
continent, within the 54 countries. But there's also so many unique elements to each of these kind of regions and countries.
mhm,
And so I think there's also a kind of power in them having to look at what are our particular circumstances and how far can our technology reach or impact others. I don't know in hindsight, and I don't have enough
mm,
expertise about the mobility, kind of how it was in the mobile space. If it was an
mm,
intentional decision to say, hey, we're going to really go hyper focus, that
yeah.
could be a strategy.
Mm.
But I think it has worked.
It has worked for sure.
Yeah.
So it's also a good bridge to the topic that we were going to discuss, which is financial inclusion, because you're a big proponent of that. Um, let's start with the question: what does financial inclusion mean?
Well, for me, I like to think of it as being able to partake in the global economy or
Mm-hmm,
in the economy in general. And that it can be from any level, at any age,
mm-hmm,
any circumstance. So being included in the economy, being able to partake, being able to contribute, I think is what financial inclusion in the kind of wider spectrum means.
mm-hmm,
What we're seeing now in terms of, we're talking about technology, right? It's come down to a few things, particularly in the West, which is probably on literacy,
mm-hmm,
which is probably on accessibility. But I think looking at the underlying reason why I think we want financial inclusion to be
mm-hmm,
more of a prominent agenda point is because we're still having so many people not being able to participate or benefit
mm-hmm,
from what we're all pursuing in terms of economic growth and sustainability,
mm-hmm.
and just being able to build something that is bigger than you and that lasts.
Yeah. Is it also about a bit about, let's say, moving people up the pyramid of Maslow in terms of
Yes, well, yes, I think that that a lot of times that's the easiest way to kind of plot it, right?
yeah,
If we can move people up that pyramid, and at the same time, that only holds true if that's your definition. of what being financially included is
Uh-huh.
all about. And I think for a lot of people, you
Mm-hmm.
I think that just being able to do the things that you want and need to do is
Mm-hmm.
enough. Whether or not that is through having an application to get access to money, or whether you have a bank or to pay your bills, that's a
Mm-hmm.
secondary thing. But being, I think, going back to what has happened on the African continent with having that opportunity to choose how you transact and making it accessible to you and your circumstances is the
Mm-hmm.
most important thing when it comes to being included.
Yeah. Okay. We also talked already briefly about literacy. What is the role of financial literacy in financial inclusion?
Yeah,
How
the funny
important is it?
I think it's greatly important, and it becomes more and more important depending on what you do. Again,
Yeah.
and I think there will be a common theme in this conversation between us about going back to maybe hyper personalization, or at least
Uh-huh.
going back from creating things for the masses to creating things for individual groups and niches and
Yeah.
circumstances, because what I will need to know to thrive in the West is not the same as I will need to know to thrive in the Middle East or in
No.
Asia.
No.
So literacy about what, right? That's really the question I always ask. How literate do I need to be? And not everything will be relevant.
Mm-hmm.
So I think that how we educate ourselves and our children on finance really
Mm-hmm.
comes down to giving everybody a broader perspective of what we hope that the economy looks like,
Mm-hmm.
and what parts of the economy are driven by some of the financial instruments that you have access to.
Mm-hmm.
So I think financial literacy has, yes, is very important. And then, but I also want to make sure that we have that disclaimer that it will not mean the same thing for everyone.
No, because it's basically it depends on what you want out of life, your financial life in this case, and it depends on basically the circumstances. What do you need to use finances for? But
Exactly. I
yeah,
think want to kind of double down on that. I think we've seen a big movement, for instance, in the West or in Europe, on getting more women to understand investment banking
yeah,
and how to use that and how to build their own maybe savings or kind of a backup and kind of build wealth, personal wealth.
yeah,
This is an interesting movement because we understand where it comes from, right? Women have had to be more dependent on either spouses or male counterparts
yeah.
to build their finances and manage their finances for them. Now we've moved away from that. We're moving away from that slowly
Yeah.
but surely. And we're building instruments to enable women to understand now what the financial system looks like and how
Mm-hmm.
you can build wealth. So in that context, it makes sense that you're going to say, hey, you need to become more financial literate on what you can do with all of these financial instruments.
Yeah.
Let's pick a topic, investment banking.
Mm-hmm.
But this wouldn't be relevant for somebody who doesn't have that problem, because either they've always been financially sound, or because they don't need the kind of they don't need money in terms of resource,
Uh-huh.
because they're self-sustaining because they live on a farm and they have everything they need. So that's
Mm-hmm.
some of the things that I'm trying to kind of balance out.
Okay. So talk to me about what we have in terms of financial solutions at the moment, and how they are built and how they are not built inclusively at this point.
Well, I've been really intrigued by this movement that's happening around access to financial instruments.
Mm-hmm.
Looking at credit, for instance, right? We have credit lines and we have ways of maybe borrowing and doing big purchases
Mm-hmm.
for whatever reason. Let's take a mortgage, right? It's one of
Yeah.
the big things that's been happening now. I think across the world, but especially in Europe, there's some momentum now, where we have sort of a housing crisis. But we also have been having problems with this generation, so millennials and those afterwards, not having the same access to financial resources to
Hmm.
purchase real estate.
Yeah.
And so we're coming up with all of these technology solutions to either buy things in part or build up a way of ownership of
Uh-huh.
things, and learning how to reconstruct what ownership looks like, or maybe
Yeah.
becoming partial owners of things. Um, when you look at the kind of underlying problem here, it's not really necessarily only that we don't have enough houses or we don't have enough things being built, but also who has access.
Yeah.
And previously, we have defined that you need to be from a certain, you need to have a certain foundation as a person in
Yeah.
terms of your employment, in terms of your income, in terms of your situation,
Yeah.
for a bank to loan you money. That was
Yeah.
the only way that you could buy something
And
of some
still
kind of
is.
worth. What's
And
the
still
way?
is.
It still is. Even though we're trying to say it's more flexible, right? Banks are still taking, they're also now giving more loans to freelancers, but kind of the conditions that you need to still uh, adhere
Match.
to
Yeah.
match are still quite tricky for most. So it's not kind of designed for the new economy and the new way of living and the new kind of standard of how
Uh-huh.
people live and work. Also, especially in the Netherlands, having an indefinite contract was a big thing,
Yeah.
right? It still is a big thing. But we've also seen over the past 5 to 10 years that an indefinite contract doesn't give as much security as it did before. So,
Yeah.
how are we looking at somebody's? Are we still being realistic about how we look at risk and
Yeah.
who fits the profile of somebody who's financially sound? And I see some solutions coming, for instance, from the States. I find this very interesting, where we're actually getting more towards a holistic view. And this is what I meant when we're talking about hyper personalization.
Mm.
Do we find somebody who has an indefinite contract with a matching income and has no particular, and maybe a two-person household and a dog,
Mm.
financially stable? Um, but has incredibly has a habit of paying late, who has a lot of outstanding kind of pay after pay kind of things going on,
Yeah.
has a lot of
Yeah.
leases going on. Do we find that person still more credible than somebody who doesn't have an indefinite contract, doesn't have the 3 to 5 times a month incomes criteria, doesn't
Yeah.
match that criteria, but always pays on time, but has a certain amount of savings, but has shown that they are always responsible to other creditors,
Mm-hmm.
debtors? I think that you will find realistically the
Mm-hmm.
chances of that person paying what they're owed on
Mm-hmm.
time is higher.
Yeah.
But we're still saying on paper that the other person is more creditworthy. And now we're finding that new technology and new opportunities to kind of leverage, for instance, AI to dive into all their payment terms and all their payment behaviors and the
Mm-hmm.
way they interact with other companies gives you a better way to score credit. And in the States, they're already giving people out, startups are already helping to give financing to people who have a bad credit score for whatever reason because their income is too low, but
Yeah.
actually are great people to lend to, because they fit this new narrative of what a good client would look like. And I think this is including now the middleman again. This is including people who previously were excluded. So this is kind of
Yeah.
my long way to kind of show the new, I think, term that financial inclusion means. It's who are we now able to include, because we're looking at things differently.
Yeah. Yeah. The system in America, at least I lived there for a couple of months, and then I discovered that I couldn't get a credit card because I didn't have a credit score.
Right.
So, and to get a credit score, you actually needed to have a loan,
Yeah.
which to me was like, okay, so not having debt is a bad thing. How?
Yeah.
help me.
Yes.
Anyway,
Yes.
but to that bit to your point of that things are changing and that startups are indeed also now looking at different ways to include people who are financially responsible at least.
Right. Exactly.
And I think not having debt is, yeah, at least fits my definition of being financially responsible. So, but what I was wondering, how do we then build good these solutions that actually make the financial services system more inclusive to people? Where do we start?
I think the biggest thing here is to break open who gets to decide what problems we're solving
Yeah.
and how they're being solved. Right now, and I think for the longest time, we've had a group of people who
Hmm.
have either deemed themselves as innovators or developers or
Hmm.
people who have access to certain networks or skills. And they were previously the people who could decide, hey, I see a problem. It's maybe a problem that my neighbor has, or I have it. And
Hmm.
I have the means, I have the skills to
Hmm.
solve this problem. So I'm
Yeah.
doing that. It's recognizable by the same kind of group of people who are in their circle, and then
Hmm.
we start solving these problems. There's
Yeah.
nothing wrong with that because a lot of great solutions came out of that. But what you find is that if we're only going to listen to people who have the means and access and skills to solve problems now,
Hmm.
then we're never going to solve the problems for everybody else. So, what
Yeah.
I mean with breaking open who gets to decide what we innovate on, what
Hmm.
problems we're solving, that's the step one. And that really requires us to go back to kind of what we're doing with technology and AI now, right? Why don't we have open AI, why don't we have open access for innovation,
Yeah.
right? Where it's no longer about you not having access to um, the resources, but it's
Uh-huh.
just as do you have enough knowledge, lived experience to help others co-build with you the solutions that we need. So I think that's one. I think the second thing is about um, who we then include in no how do we measure the impact, right?
Hmm. Yeah.
So who does it impact, and this can be positively and negatively. I think a lot of the times when we talk about impact, we say either or. We say
Yeah.
it needs to have only positive impact or it's not good, or it needs to have or it shouldn't, or the impact is so bad we shouldn't do it.
Yeah.
I think there's a middle ground where we can say that we are highly aware of the impact on both sides. And then
Hmm.
we're making informed decisions about how we can mitigate the risks and we can increase the positive impact of things. So that again requires us to have people from different backgrounds, different perspectives, the
Yeah.
lived experiences,
Hmm.
people who are on the ground who are going to know what it's going to feel like and how it's going to impact their life to co-build with you.
Yeah.
And that could be either they are driven to build that themselves and they need help with people who have the skills and the resources, or it could be that you're in every step including them to solve this problem and constantly going back and getting feedback and reiterating and not building based on assumptions.
Hmm.
um, the third level, I think, is on how do we build solutions that impact at scale. What you find a lot of the times is that if we find a problem that impacts maybe in our perception a niche group or a
Yeah.
small group or an underrepresented group that we think, we just don't give it too much attention or it doesn't get launched at scale. I don't know if I think it's important to recognize that women for a long group,
Mm.
50% of the population, were seen as as a minority group in
Yeah.
healthcare
In tech,
and
they
in tech
are
as
still.
well,
Oh,
right? So that's 50% of your population
yeah.
that is still to this day being told they are niche, which make it make sense, right? If you said that about any other demographic,
Yeah.
nobody would take you seriously as an investor anymore. If you
Yeah.
can just look somebody straight in the eye, show the numbers, and say, "Well, that's niche. That's only 50% of the world. That affects that you affect with your product."
yeah.
How does that make sense? But this is not something that we have eradicated. These conversations are still happening. And
Hmm.
so I think that making sure that we have, that we're very clear that problems that we're solving for groups of people that are different than us, that are
Hmm.
maybe not in our same gender group or not age group or whatever, doesn't make it niche. It just makes it something that you have not experienced yet or you
Yeah.
don't have to experience. Doesn't make it less of a problem.
No.
So I think that would be the last layer, right? How can we make sure that those solutions still get released in a way that can impact at scale? And we can only do that by looking at actual data and numbers and
Yeah.
not by feelings and bias.
Yeah. Well, it does. I think it does require a bit of empathy in terms of how you build it, because you have to take into account something that you haven't experienced before yourself, or that you were previously unaware of. Like myself, I wasn't aware that the whole start. If you look at startup funding now, that only 1 or 2% of funding goes to women.
Right,
And then I ran into it, and I was like, wait, what? So and then I started feeling like, okay, but this is exclusionary.
right. No, it definitely requires empathy. I
Yeah,
think when I say this, I mean that you can be there's a difference between what you're being led by, right?
yeah.
And at the end of the day, I saw this funny statistic yesterday
Hmm.
about men raising 2 times more funding than women when they build femtech startups. It blew my mind. So you're building. I have to find the research. I saved it. Female tech startup. So something that's built for women, but a man is still going to raise 2 times more than the woman who built it, who has lived the experience. So this is what I
Okay.
mean when I say
Yeah.
that, right? There's a huge difference between then what we're saying, and the reason, underlying reason, I assume, I haven't read the full report, is that the feeling that the man can execute better than the woman when it comes to running the company and scaling it is what motivates companies investors to then say, well, let's bet on the man who's building it, even though he has less experience in what he's building and who he's building it for. At least we know what he can do.
Yeah, because he matches us.
He
He's this.
matches.
He's the same. This is about bias, I think, for to a large extent, because I see someone across of the table who looks like me, who thinks like me, so he can execute like me.
Yeah.
So I have more assurance, quote unquote, that it's actually going to fly. Which, if you look at femtech solutions, is sort of, well, what you just said blew my mind, literally, because it just defies all logic.
Well, but this it comes to back to the point where
Mm.
I say that yes, we do look at ourselves and kind of want to work with people who look like us and familiarity. That's all true. But at
Mm.
the end of the day, there's something deeper there going on, and that's really been on what we have built our foundation of what success looks like and kind of
Yeah.
what we've proven to be
Mm.
right.
Yeah.
And what we have done is we've said, hey, we've had 4 companies who've become unicorns that were built by guys who look like this, went to this school, dropped
Mm.
out, and then succeeded. Four
Yeah.
out of the 4,000 that are being started a day, something like that. And we're saying, based on those 4 companies in the entire world, this is the only way
Yeah.
success looks like.
Yeah. This is the blueprint.
Which in any form of research, like nobody would take you seriously if that
Yeah.
was your data set, right?
Yeah.
So how are we using that as the way to say this should be how you make
Yeah.
investment decisions?
Yeah.
And so this is more than just saying, hey, I'm investing in somebody who looks like me. This is about, we only have these examples. That was then. However, I'm looking at, I don't know how long ago was Facebook started, or when did they
Yeah.
go to market? I think it was
2008. I think
right. So
they.
nearly 20 years ago.
Yeah.
Um, we have too many examples of women. building companies that impact at scale, that scale successfully, scale profitably, because nobody wants to talk about that,
Mm,
and have proven that there are so many other ways, more efficient ways
mm,
to build companies that we're not including in the investment thesis.
yeah,
So we really need to kind of reconsider when we say biased to what? And I think it's deeper than just saying, hey, I'm looking at a man and this is it. This is really about what kind of framework we've created around what success looks like and how to get there. And we're not, for whatever reason, open for looking at the reality of things and how other ways of building can be successful too.
yeah. Yeah, and for the record, I think a large part of Facebook, as we now know it, was built by a woman.
Yes, we know that now too.
Yeah, it was just not just Mark in
Point made.
sitting in some sort of garage coding,
Yeah.
but there were a lot of yeah,
But we
at
see
least
the same with Tesla, right? Right.
yeah,
We're now seeing that, like, after years and years of those women kind of being the building blocks of the organizations and having
hmm,
the operational hat on, which is really who's
yeah,
running the company.
yeah,
We're now seeing that, hey, perhaps there is something to the way that they are looking at things. And I think we complement each other a lot when it comes to men and women co-building together, right? I
yeah,
don't believe that there has to be an either or. But what we're seeing is that we're not equally biased towards
no,
each other then, right? So then I
no,
would say, hey, for some companies, I would prefer to have only women. Then I may have found that a more fair bias than just saying, hey, you're building something that you know everything about, but I would prefer a man to build it. So I'm going to give the money to him, right?
yeah,
That femtech data point, I'll share it to you after the show.
yeah.
It just
Well,
shows how far we still have to go when it comes to that.
yeah, we also include that in the show notes, by the way, because I'm yeah, as I said, it blew my mind. Um, so one question I still had, if you look at new ways of doing things in general, and let's take AI as an example. There's a lot of possibilities with AI, but there's also a lot of let's say negative possibilities with AI. How do we avoid throwing out the baby with the bathtub? So, how do we avoid that we discover one bad thing about this whole financial inclusion project and subsequently decide, yeah, let's not do the whole thing?
Yeah. Well, I would strongly recommend never doing that in any
No.
case. But I think that the most important thing for us to realize is that it's going to require behavioral change.
Yeah.
And it's also going to require uh, to be open for different perspectives. So,
Mm-hmm.
how can we look differently at
Mm-hmm.
set problems? And the reason why we're still having an either or conversation,
Yeah.
like, oh, let's completely regulate, which is what Europe says, or let's not regulate, what US says,
Yeah.
is because we're only having two kinds of people in the room.
Mm-hmm.
So the answer to your question is really, let the people who are deciding on this be a reflection of the people who are going to be using the
Yeah.
thing. And that's going to be different from different ages and backgrounds
Yeah.
and academic backgrounds and functions in society.
Yeah.
Those are the people who are going to be able to give you the best informed version
Yeah.
of the data that you need. So including the people who are going to use it, and not limiting that to the people you think are going to use it, but
Mm-hmm.
exploring all of the use cases.
Mm-hmm.
There's something that we've seen happen over and over in societies, that we have this technology that can
Mm-hmm.
do lots of things. And our imagination as designers or developers can only go so far. And we say, hey, what could we use this for? And maybe ask your neighbor who's kind of similar to you, because you live in the same street,
Yeah.
right? So you have this whole concept of, okay, I've explored all the options of what this tech can do.
Mm-hmm.
let's define maybe two or three best use case scenarios, and let's go to market with this,
Mhm.
which I think has worked for the time that it has worked. But now technology has gone so far, the possibilities are endless. What you're
Mhm.
finding is a lot of the times we have this joke, especially in the tech space with developers, where you've spent a lot of time building maybe a landing page or your prototype, and then
Uh-huh.
you start letting people use it, and they don't use it the way that you intended them to use it.
Uh,
They break things, right?
yeah.
And this is the funny thing about it. This is how we still build technology to this day, where we say, hey, why are you using it differently? It's the same as how we make, how we build roads. You still see people taking shortcuts because it wasn't built in the way that works for them,
Yeah.
right? Had you asked or had you put somebody there or a camera there for a month and seen how people walk, you would find out that
Yeah.
probably you have to build it differently. It's
Yeah.
really in the simplest things of, do we know, do we really know what we're talking about? Do we
Mm.
really know who we're building this for? And do we
Yeah.
really know what this could be used for?
Yeah.
There's something about enriching your kind of opening up opportunities from the beginning that
Mhm.
we try to incorporate, right? We have innovation cycles and we have all of these kind of
Mhm.
roadmaps and canvases to kind of ideate and be open, but they're
Yeah.
really just closing us up. The
Yeah.
only thing that we need to do more of is make sure that once we have the great opportunity to use technology in a new way, to let it be used by as many people as possible
Yeah.
in different ways, and then find out together what good it could be for, used
Yeah.
for.
But also then accept that it can be used initially for, let's say, not so positive purposes.
Yes, and I think that should always be in the back of your mind.
Yeah.
And you should expect it, I would say,
Yeah.
that yes, some people will use it for things that can negatively impact society or
Yeah.
negatively impact you. And you will always have that. Um, the problem isn't that things can be used for bad. I think the
Mm.
problem is that we're not building the things to be used for as much good as possible. And so you're just using it to be functional. You're using it to be functional for the thing that the kind of the thing that you want it to do, and
Yeah.
then you spend a lot of time making sure that those people who use it for bad don't use it for bad too much. When I
Yeah.
think that you see this in finance, right? In the banking sector, they're using AI, to fight um,
Money
uh,
laundering and
money
terrorism.
laundering
Yeah.
at scale, some of
Yeah.
the biggest banks, and it's super, super, super successful. This
Yeah.
same technology is also being used by by those who are using it for bad purposes,
Uh-huh.
and it's a constant, and they're usually faster than the bank in finding out other ways of
Yeah.
how they could use that in a more efficient way to money launder, right? So this is always going to be a battle. And at the same time, you can be ahead of that by saying, hey, okay, so if this is the way that they're using it for money laundering,
Mm.
what does it say about our current system? What does it say about the way we transact now? Because
Mm.
clearly it's favorable for them the way we have built our infrastructure.
Yeah.
So maybe we need to look at our infrastructure. And I think a
Yeah.
lot of companies and organizations are afraid to look at that because that means we have to change everything that we know and
Yeah.
we thought was right.
Yeah. And also, yeah, it means going back to the legacy and technologies that we have
Yeah.
and rebuilding, maybe even from scratch.
And that's
And then
scary.
people,
That's,
yeah, well, it's also loss, eh? Because then I lose something
yes,
that I thought was really valuable. And all of a sudden, the loss aversion to humans is, let's say, one of the most important psychological drivers I think there is. So
absolutely.
that is going to play a role as well
Yes.
in that
Yeah.
debate, I think.
So, and this is why you find that uh, startups or smaller organizations are more easily adapting to
Hmm.
these risks, and they can mitigate those risks earlier because they're okay with rebuilding. They're
Yeah,
okay
they're
with
building from scratch
They're
anyway.
building from scratch anyway. They have nothing. They have more to lose,
Yeah,
in the sense if they don't.
yeah,
Which sounds like a contradiction, but really, when you look at it, you know, and actually they have nothing to lose, sorry. And the reason why that is because, well, they're not ahead yet. They don't have entire markets already under their belt, so they may as well try to get ahead as much as they can. And if
yeah,
that requires them to rebuild or rethink what they thought was right, that's what they're going to do. And I
yeah.
think that this is also what the kind of what AI is forcing companies to do. It's
Hmm.
to let go of kind of, we're building this for the next 20 years,
Yeah,
of that kind of narrative, and understanding that you're going to have to build something that is so flexible that you could change it in the next 2 years
yeah,
if it's necessary. And how does that work? How does your organization look like then? We see that with banks now. Well, maybe we're going to be an online bank only, right? We
yeah,
have one of the biggest online banks now in the world. I think it's coming from Brazil.
yeah,
Right, this hasn't happened before, and they have built it this way from scratch, and so they don't have the same challenges that you would have at scale as a traditional bank, only because they said, well, we're going to take away all of the limitations that we see traditional infrastructure has put in place for us. And so if there are risks with the new way of technology and doing business, we
mm,
can easily adapt to that.
yeah. That's a very good bridge to my next question. Um, so we have financial inclusion. Well, it's not. I don't think it's really a new concept in the sense that it has never been on the radar. But the way you describe it, I think is really is a bit new to many, especially the traditional banks, I would say. Is it a zero sum game? Because we talked about loss and loss aversion and about losing status and having to rebuild it. Is it a zero sum game? So what I have to give away, I have to give something away for someone else to change, to get better.
I definitely don't think so. And the reason why is because I always see it as this, right? You can have this huge table
Hmm.
with multiple chairs,
Yeah.
um, and if you're sitting at a table, and maybe two other people are sitting at a table, and there's still 10 other seats left.
Hmm.
Giving somebody else one of those seats is not going to affect you in any way. You don't have to get up. You're still at the table.
Yeah.
You still have input. You still have impact. Only somebody else has added value probably to the room,
Uh huh.
and now you have more force to make decisions or to go faster or to do things.
Yeah.
And so, filling those seats doesn't take away from you. I think it only adds. So I definitely don't think it's a zero sum game. I think it becomes a compounding effect when we do.
I agree. I want to switch gears a bit. You have a company, Future Ventures. So how does it contribute to a more inclusive financial and tech ecosystem?
Yeah, so one of the things that I found with my work at Ofori and Company, which is my consultancy firm, is
Mm,
that a lot of the companies that were looking to scale, who were
mm,
building solutions that were um, disrupting traditional
mm,
industries and markets,
yeah,
um, they came at the solutions from different perspectives that people weren't used to. Or they
yeah,
were coming up with solutions. We spoke about this earlier in the
mm,
program. They came up with problems to solutions that people didn't know were problems at all
yeah,
and assumed, therefore, they weren't big enough because I haven't
yeah,
heard from it.
yeah. They were niche.
They were niche, right? And so, and what happens is that the ripple effect of that is that you don't get the resources allocated to you as a founder or a startup because people don't recognize the problem as much, even though you have the data, you're showing the
Mm,
data. And because people don't understand or don't want to understand, or it takes too much effort to understand why this needs to be solved, we don't see those companies scaling. And
mm-hmm,
so I thought that there are few things that we need to change, but one of the things that we can already do today is
mm-hmm,
change who or diversify who is able to give out the resources, and
Hmm.
who can open doors, and who you have access to as a founder.
Yeah.
Um, and we know that within venture capital, for instance, it's already incredibly difficult to get either venture capital funding if you're looking for it. It's also one of the most kind of praised ways to raise financing for your company.
Yeah.
When we know from data that only 1% in the world actually gets venture capitally backed, which
Yeah.
I think we don't talk about enough. Right? It's
So
really
it's niche.
it's niche. That's niche, right? If you're if we're going to talk about niche, having a company being one of the 1% of companies that gets VC money in the world, I
Mhm.
think we could say is something niche. So the 99%, or let's give them, let's 98% of companies who don't get VC money,
No.
those are the companies that have found another way.
Yeah.
And I am really looking to build a bridge where we're opening up doors and ways for companies to scale, using all the ways that you can get access to capital,
Yeah.
and all the ways that you can get access to the right networks or the people that you require, because money is one of the things.
Yeah.
You will find that most of the companies that are being built with an impact focus, or are being built really driven from a solving a huge problem, they don't usually have a profitability issue once they hit traction.
Yeah.
So they wouldn't need a lot of follow on investment. Maybe if
Hmm.
they want to grow faster, but not the fact that they want to grow at all.
No.
It's usually around who they have access to. So with Future Ventures, I'm looking to give founders exactly that, access to capital in all the ways that you can get it. So whether
Yeah.
it is through VC, whether it's through angel investment, whether it's through crowdfunding, whether it's to building sustainable business models, which requires coaching and training
Yeah.
that can help you to grow sustainably yourself. Or whether it is to getting access to the right resources when it comes to people, knowledge, expertise. I think there should be more room for companies and founders who want to build their companies that way, that are self-sustaining from the beginning
Yeah.
or very early on, and also want to grow. Not grow at all costs, but grow because they're looking to grow and scale their impact.
Yeah. Yeah. You're also looking at it from a much more holistic point of view, I think, because you're not just looking at like, okay, let's put a bag of money in and see what happens, but you're also looking at like, okay, how can I include people, processes, systems, what have you in there?
Yeah, because when you really look at it, I think, if we're honest, what successful company can we point out that was only successful because they had money?
Yeah.
Like, I will wait. There's
Yeah.
no company. You can keep a company alive, but I'm talking about successful,
Yeah.
right? And there's a huge difference between that. There are certain companies that we like to use as scapegoats or names of examples of who that happened to, like WeWork or all of those companies, where we're keeping these companies alive. We're pushing for IPOs. We're pushing for them becoming unicorns,
Yeah.
but really only because of monetary reasons. But is the company itself really sustainable? Does the company really solve a problem that people constantly want to be paying for and will only
Yeah.
grow because of that? A lot of the times you will find that money can never sustain that if the answer is no. So
Yeah.
you're always going to have to build a good foundation where you say, yes, the team is great. The problem you're solving is big enough. The solution you're bringing is spot on for it. And there's room for growth in that towards the future. Then you have something there where you're saying, okay, you if capital is one of the things that you're missing right now because you have to do some major investments, then it makes sense to invest. So I always look at it from the other way around. If all of the other things match or are
Mm.
matchable, because you won't have everything perfect from the beginning,
No.
then it's a no-brainer that money will be invested. But I don't think that we should look at things and say, hey, let's spray as much money as we can to it and see if it works. It just doesn't. We don't see the newspaper articles about those companies who've IPO'd that are no longer existing.
No.
And most of them are empty shells on the stock market now, if they even are still there.
Yeah. And there's quite a bunch, I think. I can't
Yes,
remember off the top of my head, but we had some IPOs last year that were like successful and then not successful.
quite
Success,
soon. Some of them within
yeah,
a year.
yeah, yeah,
So,
yeah. So, and how can male allies contribute to this? So we get a more inclusive financial and tech ecosystem. We look at it more holistically. How can male allies play a role in that?
well, I think you do a great job of raising awareness and having conversations with people that can bring different perspectives to
Hmm.
what we're actually talking about. So I think awareness, being aware,
Hmm.
and men being kind of taking charge of raising that awareness,
Yeah,
I think is highly effective. I don't know if you've seen that happening already, but I think there's something about um, not the people who are mostly affected only speaking out, but also
mm,
the people who have, in some ways, more power to change it,
yeah,
also speaking out. I think it needs to be a joint effort,
yeah,
exactly because of what you said. So, allyship in terms of awareness is important, but I also think that making room, like you said, not seeing it as a zero sum game is hugely important.
yeah,
Not feeling threatened by having more people. Um, Thinking about things that you also think about and
yeah,
solving problems that you may also want to solve. Look at it from the perspective of, hey, I didn't know I had access to even more support and even more expertise
yeah,
and even more ideas. And now I do. Right. So making room and space for each other, I think, is incredibly important. And thirdly, I think it's going to be about intentionality, right? At the end of the day, having good intentions is nice, but making intentional decisions,
yeah.
speaking out, setting the example.
Hmm.
I remember one of the things I'll never forget is when I was working with a male colleague of mine, and I was in the lead for this project, and I tend to introduce myself in a certain way because
Mm,
I take my time to introduce myself in board meetings and things like that because I just so happen to be underestimated when I walk into rooms.
mm,
And so I take my time to introduce myself. I see people's kind of body posture change a bit, and they're like, oh, she actually knows what she's talking about, or she has the right to be here. Something
mm,
happens. And then this particular meeting, I didn't do that because I didn't feel like it. And I thought,
mm,
surely I don't have to do this every time.
mm,
And this was a room full of male CEOs. I was going to be the lead consultant in the meeting, and my colleague was kind of making tea. And they were like, can you make tea for us, Kimberly? And I remember very well, and I use this example a lot. My colleague just he took a moment to calm himself down because he was so shocked
mm,
and embarrassed that the tone and kind of the question and the way that I was being positioned from the beginning of that meeting, that hey, you're probably not
mm,
somebody that we can have this level of conversation with, but you're probably good for giving us tea. I remember that him showing up and saying, well, first of all, if anybody needs tea or coffee, I'm the coffee guy.
mm.
um,
Yeah,
and she's the lead consultant on this project.
mm,
I'm just kind of here in support, and so let's please not ask a consultant, but I'll spare you her hourly rate to put coffee for you. That will be a very expensive meeting you're having here
yeah,
today. It's conversations like that that kind of really move the needle because I can
yeah.
tell you all those teams 10 CEOs at the table, uh, they left and I don't think they ever did that again.
No, no, they got set straight
Yes,
in
yes.
a
And this,
really, yeah. But it's also really effective to do that, and I think yeah, the support part and really showing up like that, saying, okay, no, I'm the coffee guy, and she's your lead consultant today. Really is a powerful signal that many, yeah, it's a good example for male allies that they for sure can use. Heard it before that it also gives it give you a feeling of empowerment.
I wouldn't say empowerment. I think that but it removed a barrier
Yeah.
for me that I knew I was going to have to overcome anyway, but now I didn't have to
Mm.
because my ally helped me with it.
Yeah.
And so I had that less energy to spend on something that was not necessary.
Yeah.
And in that sense, it gave me something back, right?
Yeah.
So it gave me back the right to not spend energy on also how people perceive me,
Yeah.
or being respected or earning respect in the room. And I
Yeah.
think that's something that we take for granted a lot of times.
Yeah.
But that he said, I have taken that for granted, that I walk in and people assume I am the expert.
Mm.
You have to actually think about, now I understand why you always did that. You have to think about how people are going to perceive you, and that they're probably not going to perceive you in the way that you require for you to help them.
Yeah.
So kind of taking away, understanding that privilege, to put it into that sense
Yeah.
of, okay, I am in a room where I'm going to be respected by default, and I am thinking I'm going to be in the room where I'm not going to be respected by
Mm.
default. I would say gave me something back. That was just one less thing I had to worry about.
Yeah. Sounds like a great place to close down or and to move to the last question I have. I have this arrangement with Jacqueline van den Ende to make this podcast obsolete in by the end of 24. What would be your expert advice to do this, to make this happen?
I really believe in the power of movements. And I think that what you are doing now is you've started a movement, right?
Mhm.
You've started a movement which will be a ripple effect of saying, I'm not going to wait
Yeah.
until other people help us solve this problem.
Yeah.
I'm going to be part of the solution. And I think that activating your audience,
Yeah.
activating other men, maybe having a challenge, having something that people can easily tap into,
Mhm.
is going to really push the needle. Because if there's one thing that I've learned is that, yeah, people are not going to change, or things are
No.
not going to change unless we change them, right? But
Yeah.
most of the time, change only happens in waves.
Yeah.
And so you've started a wave. I think that your call for action will probably be the thing that will, while you're still doing it, will really help us to not only kind of dream about how things could be, but really start just doing it.
Yeah.
Um, Make it personal, I think, would be my second thing. Make it personal, remind people of their daughters, their sisters, their mothers, who are going to be affected by this, and how it's going to affect them
Yeah.
if we don't change that. And I
Yeah.
think this has been probably the most successful thing that I've seen happen, where I remember, like, well, it's not that bad, until their daughter comes home and tells them what happened today.
Yeah. Yeah, I think that's usually a powerful way of framing it. Look at your own. Yeah, going back to the to looking at your own circle, which is where looking at your own circle actually works.
Exactly.
Yeah,
So kind of making it something that you can directly impact
yeah,
usually helps with, and if everybody does that, then we start getting that movement, and a
yeah,
wave that
yeah.
changes things.
The ripple effect
Yes.
sounds like a great place to close. Thank you very
Awesome.
much, Kimberly Ofori. Really enjoyed this conversation. If people would like to learn more about you, where would you like to send them?
Probably I'm most active on LinkedIn. So Kimberly Ofori, look me up. Also, the links to all my websites are on there as well.
Good, and we'll include those links in the show notes. Kimberly, thank you very much. It's been a really good conversation. Really enjoyed it. Listeners, thank you very much for listening, and hope to see you in the next episode. Well, that's it. Thank you for listening to episode 54 of Women Disrupting Tech with Kimberly Ofori about the power of financial inclusion for a better planet. Kimberly and I hope that you've enjoyed our conversation as much as we did. And if you'd like to learn more about Kimberly, her consultancy, and her activities at Future Ventures Fund, feel free to connect with her via the links in the show notes. As usual, you can find the show notes at womendisruptingtech.blog. On that same website, you can also become a member of the Women Disrupting Tech community. Members get exclusive access to Women Disrupting Tech events, and you're the first to learn when new episodes or blogs come online. If you're a woman looking for a career in tech and you're looking for a role model to inspire your own hero's journey, please check out one of the 53 other episodes of this podcast on Spotify, Apple, and Good Pods. And if you're a regular listener, would you consider giving the show a rating or a review? Because that way you help other people discover the podcast. If you're a male ally and you want to help Kimberly and the other 53 women disrupting tech make this podcast obsolete by the end of 2032, there's a simple thing you can do. Please share the podcast with friends, family, and co-workers. This way you give my guests, including Kimberly, the platform they need to make it happen. Finally, if you want to connect with me, you can reach me via dirkjan at womendisruptingtech.blog or by sending me a DM on LinkedIn. On LinkedIn, just look up my name and you'll find me. With that, I wish you a wonderful day. I hope to see you in the next episode, and in the meantime, keep being awesome.